Welcome to Blockkoin Academy. Today we'll be testing the Blockkoin derivatives. We won't be placing any trades today, and we won't be trying to make any money today. We are strictly learning how the platform works so that you guys don't lose money. First things first, I would like to say that this is not financial advice. This is strictly for educational purposes only. So most beginners don't fail because they predict wrong. They fail because they don't understand leverage trading. This lesson today is going to be split into 5 different steps just so that you guys can keep up. So step 1, what is derivatives? So the difference between derivatives and, as you can see over here, spot. With spot, let me just click on a different coin, BTC. So Bitcoin, BTC. With spot, you buy 1 Bitcoin or you buy as much Bitcoin as you'd like, and now you own that asset, you own that Bitcoin. So no matter what price does, if price goes to 200,000 or whether it goes to 0, you now own that Bitcoin or that portion of Bitcoin at that price. But with derivatives, you are now trading based on a contract. So what that means is you can make profit either predicting Bitcoin goes up or down. And the way you do that is by clicking either long or short here on the right of your screen. Long meaning predicting price is going to go up, short meaning price is going to go down. So step 2, understanding the chart. So right here you can see our chart over here. It's directly from TradingView, as you can see. In your top left over here, actually here first, you have your pairs. These are all the pairs that you can find on the exchange. Just for today's example, we'll be looking at BTC USDT. Currently we are looking at the 5-minute chart, but you can go through either the 15, as you can see, 1 hour, 1 day, 1 week, 1 month. All that means is each one of these candles over here on the 15-minute time frame represents that time frame. So this current candle over here is 15 minutes, the green one is 15, the red one is 15, and so on and so forth. So green candles mean obviously bullish, red candles meaning bearish. Green candles basically means the buyers are pushing the price up, whereas red candles mean the sellers are pushing price down. So that's the market and the time frames. Step 3, most importantly, leverage. Now we'll be looking on the right hand side of your screen over here. This is where most beginners will lose money. So what does leverage do? Leverage allows you to control a bigger position than your balance. Example, if I have about, let's say, $100 and I use 10x leverage, I'm controlling $1,000. So 10x leverage would be over here. As you can see, you can go from 1x all the way up into 15x. So like I said, for example, if you have $100 and you 10x your trade, 10x leverage your trade, you are now in control of $1,000. So if price moves 1% in my favor, I make 10%. But if price moves 1% against me, I lose 10%. So leverage multiplies profit, but it also multiplies mistakes. That's what you guys need to understand. Okay, so from that we can move now into step 4. As you can see over here, we have your liquidation at 20%. So what is liquidation? Liquidation means your position is automatically closed before or because your losses reached your collateral limit. So if you use too much leverage and price moves slightly against you, your trade gets closed. And what you guys need to understand is that this is not the market attacking you. This is simply leverage working exactly as designed. So step 5, position size. So if we look here on the right again, we have the quantity. This controls how much of your balance you are risking. So as you can see, in my balance I have about $40,000 over here, 40,000 USDT. So I can trade with 40,000 and less, of course. So if you use 100% of your of your liquidity over here, you now leave no room for volatility, meaning that if price even moves slightly a bit, you could get liquidated. So I would strongly advise you guys stay away from that. Whether you are a beginner or a professional trader, it's mainly just seen as gambling because you are not working with any space or any room for the market to move. Yes, so professional traders always think about the risk first rather than profit first, just so that you can keep your head down and leveled. Yeah, so if you look over at the top here, we won't be going over the funding rate. We'll be going over that a bit later in the journey. I just wanted to teach the absolute basics of how the derivatives work on Blockkoin. Yeah, so maybe what I didn't cover was this 24-hour change over here. This is in the last 24 hours, we went down 1.89%, meaning we went down $1,326. The 24-hour high, also meaning the last high in the past 24 hours was about 70,388, and exactly the same with the low. The last low was about 68,046. So we'll go into more detail further down the line. These are just once again the absolute basics of how derivatives work and what derivatives are, especially on the Blockkoin exchange. So lesson one is quite simple. Understand what you are clicking before you click it. If you understand leverage and liquidation, you are already ahead of most beginners. Next lesson, we will cover up position sizing and how to calculate the risk before entering a trade. Always protect capital first, growth comes later.